And here we go. All right, so the League of Women Voters has studied the issue of how to adequately and fairly raise revenue in our state for a long time. In fact, we've had a position on this topic for 40 years. And so we are delighted tonight to present to you what we think you need to know about the constitutional amendment referendum that will be on your ballot when you go into the voting booth on November 3rd, or when you receive your vote by mail ballot any day now. So what will be on the ballot? Yeah, and if everybody could mute your speaker, yeah, that would be great. And I'll try to not mute mine by accident too, and we'll all be here. Okay, so last year, the General Assembly passed Senate Joint Resolution Constitutional Amendment 1, which put this issue on the ballot. The General Assembly by itself cannot amend the Constitution. It needs a vote of the people. And so that is why it is on the ballot. The only question on your ballot is whether to remove the flat rate income tax requirement in the Constitution. At the same time they passed this Senate Joint Resolution Constitutional Amendment 1, they also passed a bill that set what the rates would be if, in fact, the voters approved the change in the Constitution. And so that is a separate bill setting what the rates will be. And we will talk about that in a minute. But first, I just want to talk about the constitutional amendment itself. This is what will happen if you vote yes. It will strike this particular sentence in the Constitution and just remove it. And that will provide the freedom for the General Assembly to set a graduated rate income tax. This is the language in the amendment itself. It will remove the portion of that article that I just showed you, and it will require that the thing that is going out, it requires that everything be taxed at a flat rate, at the same rate, and it will make it possible to impose higher tax rates on those with higher income levels and lower income tax rates on those with middle or lower income levels. You are asked to decide whether the proposed amendment should become a part of the Constitution. So this is what will be in your ballot. And the actual place on the ballot, I have just figured out.
Not able to understand. Steve, can you reply?
Excuse me. Yeah. So is everybody still there?
Yes, we are.
Okay, great. I discovered this little video, which I hope will pop up very soon. And it shows you exactly where on the ballot this is. It's a little hard to find.
Can you see my chat suggestion?
So when you get your ballot, if you look in the upper left-hand side, it is not right exactly there, but if you scroll down a little bit, it's in this part of your ballot. It's kind of difficult to locate, actually. And so look for that before you even vote for president. Just look for this thing on your ballot. I'll show you one more time here. Here's the ballot, and then
and we're not seeing the ballot. We're just seeing the Facebook.
Oh, sorry. Okay, well, never mind that. We'll get out of there. Basically, you just have to keep looking down the left side of the ballot, and you will finally find in the small print the language I just showed you about changing the Constitution to permit a graduated rate income tax. It's on the left side, first page. Look for that before you even try to vote for anybody else. It's there. You will just have to find it, I guess. Okay, so back to the presentation. Oh man, we are having all kinds of trouble tonight. So sorry. Let's go back. And here we are. So some people will tell you that having a flat rate where everybody pays the same rate, it's at 4.95% of your income is paid as an income tax. A family making $25,000 a year or a family making $25 million a year pays the same rate, 4.95 currently. And that seems fair. Everybody's paying the same percentage. But in fact, we think it's not so fair because there are many different taxes that you're paying in state and local taxes, and most of them are quite regressive. Your property taxes, your sales taxes, those are all very regressive taxes, so that lower income families, like the one making $25,000 a year, ends up spending 14% of its income in those state and local taxes. And a wealthier family, one making above, say, $500,000, is paying 14% or 7% of its income in state and local taxes. So as you can see from this graph, the lowest 20% is paying 14% as a share of their income. Middle income earners are paying 11 or 12% of their income in taxes. And the highest 1%, those making above $500,000 a year, are paying only 7% of their income in state and local taxes. So as you can see from this chart, since 1979, the top 1% earners in our country have seen a huge spike in their actual income. In 1979, the average made by the top 1% was about $400,000. And today it's close to $1.5 million. At the same time, those of us in the rest of the brackets, the bottom 99% of us, have seen only a very small increase in their income, from about $51,000 to $61,000 a year. So good tax policy would indicate that taxing the folks who have seen a huge growth in their income makes more sense. They have more disposable income, obviously, and they have seen growth in their incomes, whereas the bottom 99% have not seen that growth, and there is less money to be able to contribute to the state revenue. Part of the reason that the state has not been able to fund education in our state is that revenues have not been keeping pace with the growth in the top 1%'s income. So nationally, states pay about half, slightly under half of the share of education funding. In Illinois, the state is only paying about 27% of education funding. So what happens when the state can't pay the full bill for education is that the burden shifts to the local municipalities and school districts, and that shows up in your property tax bill. So in Illinois today, your local government is paying about 66% of the cost of education, whereas nationally, it's only about 44% is being paid through property taxes. I'm sure all of us have seen that pinch as property taxes have continued to rise. It shows up in renters' pockets as well when the landlord raises rents because their taxes have gone up on the rental property. So everybody in Illinois, business owners, homeowners, and renters are paying higher and higher property taxes, which is directly related to the state's failure to pay its fair share of education funding. Another thing that has fallen short over time in Illinois, as we have not had adequate revenue, is the agencies that protect our environment have seen cuts in their headcount and cuts in their ability to enforce environmental laws. The Illinois Environmental Protection Agency has seen its actual headcount cut in half from 2003 to 2018. And the Sierra Club of Illinois is a source of this slide. They are strong advocates for the fair tax. This is another chart, courtesy of the Center on Tax and Budget Accountability, that shows how spending has been declining on our core key services in Illinois. The discretionary part of the Illinois budget is really spent on just four things: education, healthcare, human services, and public safety. That accounts for 96% of the discretionary funding that the state has to work with. And in 2000, the enacted general budget dollars are in this column. The CTBA adjusted it for population and inflation, looked at what the budget that was just enacted is, and then sees what the difference is between 2000 and today, and what the change has been. And they found that K-12 education has increased only 1%. That is in large part due to a bill that was passed in 2017 that provided evidence-based funding for education, so that we can finally get an educational system built on equity in the state, so that a child's quality of education is not dependent on their zip code. Addison, in particular, has seen some substantial needs in terms of children who need support with bilingual education. Their additional needs include special education. Low-income students need higher services, and the new funding formula supports those students and provides extra funding for the districts that serve them. They kept their promise to provide additional education in the last 3 years, but unless we can pass the fair tax and get additional revenue, that will come to a stop. So most of the growth in education has come in the last 3 years, and it's not very much. We have a long way to go still in funding education. Higher education, in the meantime, has been cut by about half. Tuitions have gone up, scholarships have started to evaporate, and faculty have been cut. Healthcare has been hurt. Human services have been very drastically hurt. Public safety spending has gone down. And so the total net funding on this discretionary funding has gone down by 20%. So the problem in Illinois is not that we have been spending too much. We're spending quite a bit less than we did in 2000. The problem is that we haven't had revenues that keep up with our needs. So how do we get there? You can see that we have a choice between what's called a flat tax system or a graduated rate system, which is sometimes called the fair tax system. A majority of the states in the nation use a graduated rate income tax, including the majority of our neighboring states. We are one of only 4 states in the country that requires a flat tax in our state constitution. So what are the rates that the legislature has proposed? If we pass the amendment, and the legislature has the flexibility to structure how they impose taxes, they can have higher rates for higher earners and lower rates for lower earners. And that is fundamentally fair, because then the wealthy pay their share and the burden is lifted off middle and working class families. 97% of Illinoisans, under the rates that have been proposed, will see no income tax increase, with the majority of middle and lower income families getting an actual tax cut. It's a small tax cut, but it's a cut nevertheless. Only those making over $250,000 a year will pay more, and that includes small business owners as well as individual ratepayers. This is what the structure looks like, and this is what will take effect on January 1st, 2021, if the amendment passes. So 27% of taxpayers will pay just 4.75% because their income bracket is between 0 and 10,000. Those who make up to 100,000 will still pay 4.75 on that first 10,000, and then they'll pay 4.9% on the amount above 10,000. And then on up to those who make up to 250,000 will still pay less than they are currently paying under our flat tax system at 4.95%. That leaves only 3% of the population who will pay any more. If you make, say, $300,000 a year, on the first 250,000, you'll pay either 4.75, 4.9, and then 4.95. And only on that last 50,000 will you pay the higher rate. And then it goes up a little bit if you're making 350 for a single person or 500 as a joint filer. If you make above $750,000 and you're single, or if you make above $1 million for a joint filing family, then you will pay a higher rate on the entire amount of your income, 7.99% on your entire income. But 97% of taxpayers will be paying less than they are currently paying. There are additional credits which will lower the bill even more. There's an expanded property tax credit and a child tax credit for children up to age 17 of $100 per child for families making 100,000 or less. There's a tax calculator online that you can go to and plug in the amount of things that will affect your family, whether you get exemptions for being 65 or older, and other things that the state gives credit for. And you can see how will the tax that will take effect January 1st actually affect your family. So what do our neighbors do? Minnesota, Wisconsin, Iowa, Missouri, Ohio all have graduated rates. And many of them have higher tax rates than are even being proposed. For example, Minnesota's top rate is 9.85%. Iowa's top rate is 8.53%. And that kicks in at a much lower level than is proposed. So if you move to Iowa now, you will pay a much higher tax rate than you do currently in Illinois, and that you will pay under the proposed new fair tax as well. The fair tax, even though it affects relatively few people, it's taxing those who make quite a bit. And so it will bring in an additional $3 billion. And that funding can be used to help our communities. It will help with the education funding promise that was made. It will provide money for jobs programs, public safety, human services, healthcare, and other needs that are identified by the communities. It can also be used to help the state address some of the expenses that have been caused by the COVID crisis. It will help us with our pension issue. It will help to pay unpaid bills that have been accumulating over many years as we have failed to have adequate revenues to meet our needs. The League of Women Voters is part of a nonpartisan ballot committee made up of diverse coalition of organizations. There are teachers, faith communities, community organizations, and we're all working together to get the word out, to provide information, and directly engage voters. And so working together, we are hoping to see what the League has been trying to achieve for 40 years, to get a graduated rate structure in our state. The fair tax has to be approved by voters, and it's a fairly high bar. We need a yes vote of more than 50% of those voting in the election. Or if people have trouble finding the question on the ballot, remember it's on the left, kind of halfway down the page. If they choose to skip over that, or they can't find it, then we need a yes vote by more than 60% of those who do vote on the question. So there are many ways that we can help, that you can help, and we can help you help. So we'll get into that, but I think I'd like to stop now and see what kind of questions that folks have. And I'll, but
And none have been posed in the chat yet. I do invite people to write your questions in the chat.
okay. Well, maybe to kick things off, well, I'll come back to this, but right now, Steve, you had a mailer that showed up in today or recently, and I wonder if you could show that or hold it up to the camera and people can see
Sure.
what it looks like. Yeah. Did anybody else get this today? I just want to address maybe some of the things that are stated on that mailer. One is talking about how politicians will have a new power to raise your taxes. In fact, politicians, the legislators that you have sent to Springfield are entrusted with the authority to set what the tax rates will be. That is their job. And they have currently set the flat rate of 4.95%. If the fair tax does not pass, they will have the power to raise your taxes to some other level. In order to get as much money as the fair tax would bring in, the flat tax rate would have to go up for everybody to about 5.95%, which would be a 20% tax increase. Legislators really don't want to do that. So they have proposed instead to have a tax system where they can get that $3 billion, not from everybody, but just from those who can most afford it, the top 3%. So that is a myth that these are new powers that are being granted. The only thing that is changing is the structure of the rates. It's not that they will have any more power to raise your taxes.
And there's a question about how it will affect retirement benefits. They said they've heard it'll open the door for taxation on retirement benefits.
Yes. Currently, retirement income is not taxed in Illinois. We're one of just 3 states that does not tax Social Security, 401ks, IRAs, or pensions. That revenue currently is not taxed at all in Illinois. The fair tax will not change that. It will not open any doors. The legislature has discussed it in the past. They have the power to do that today. If they would like to do that, they can raise taxes on retirement income. They have chosen to exempt it from state income tax. They could choose to exempt part of it and tax the rest of it, but they have heard loud and clear from groups like the AARP and other retired people's groups that that would be bad news for them if they would do that. And so they have chosen to continue to exempt retirement income. And the fair tax is supported, in fact, by the AARP, the American Association of Retired Persons, because they believe that the fair tax will buffer and protect retirement income from being taxed. There will be sufficient revenue that the legislature will not need to look to retirees. If the fair tax does not pass, the AARP is concerned that retirement income would be in the list of things that would be considered.
There's a question that kind of has 2 parts to it. If revenue has been going down for years in the state, how will taxing small businesses over $250,000 help promote state revenues? I think we need to parse that out. The first part is, what will be the effect on small businesses?
Okay, there are about 1.2 million small businesses in our state. A lot of small businesses. They are organized in one of 3 ways. Either they're sole proprietorships or partnerships, or they're subchapter S corporations, taxed under the Internal Revenue Code as income through the owner or partner's personal income tax return. So of those 3 ways of small business organization, very few make above $250,000. The estimate I heard most recently was under 19,000 individuals of any kind, including small businesses, make that much money. So to have a rate increase at $250,000 will affect some small businesses. Those who are making that kind of profit, it's not just their income, it's not their net, their gross income, it's their profits. They have not been harmed by the COVID crisis the way many other businesses have. So the effect of adding to the state revenue, we have heard from David Boris, who's with the National Main Street Alliance Small Business Association, that it will actually help those businesses because first, there will be additional income in everybody's pockets, the 97% that is not paying higher taxes and the 90% of other small businesses that are not paying higher taxes will have more money to spend on services and goods that they produce. And a second reason is that the communities in which people choose to live and take jobs will be stronger, education will be better, the workforce will be better educated, and people will be happier to live in thriving communities. And third, there will be more fiscal stability for the state. Business is probably more concerned about stability than they are about what the actual tax rate is. And this, in fact, will help small businesses.
So then the question is, if revenues have been going down, how will this help promote state revenues? And I think what they're getting at here is that with the flat tax has not been responsive to where the economic growth has been. And so the flat tax is trying to get money from, that bottom 99%, which has seen very little income growth. And they're not getting nearly as much money as they could from the top 1%, which has seen a massive amount of income growth. So the point of the graduated tax, and actually this is something that goes way back to Adam Smith, the father of capitalism, said, you really need to have higher tax rates on the top income earners. And so you can't get blood from a stone. You can't keep expecting middle and lower classes who are not seeing income growth to pay more and get more money from that we're looking at the only sector of the economy which has seen income growth, and they've seen a massive amount of income growth, and the calculations are that top 3% will give us $3 billion in revenue from this rate structure.
There's been a lot of speculation that the legislature will immediately change the rate schedule that they have proposed. And if they really wanted to tax the middle classes, they could do that today without changing the rate structure. The reason for the graduated rate structure is so that they can avoid taxing the middle classes. They can get the revenue they need from folks who can afford to provide it. Think about the logic of some of the claims that have been made. On the one hand, they're saying that legislators will not raise your rates. They will not give you higher taxes above 4.95% because they'll hear from you. And then on the other hand, they'll say, well, but if they enact this graduated tax rate, they will immediately raise your taxes. Well, I mean, that's logically completely contradictory. And I think that the fact is, it's a very tough vote for legislators to raise taxes ever. And it will be easier for them to raise taxes on just the top 3% where they are able to get the kind of revenue they need by impacting only those who can most afford it. And they will be very loath to tax the middle class any further, just like they are today.
There's a question about the part of where it, okay, in the bill that was passed, what is being amended in the Constitution would in part cross out a sentence which says that you can have no more than one income tax imposed. And Ann and I talked with Don Harmon, what was that, 6 months ago, I guess, to find out what the heck that meant, because we were certainly puzzled by it as well. And what we learned was that the concern was that what they're imposing here are tax rates. They want multiple tax rates. And if you had this restriction that there can only be one tax, they were looking into their crystal balls and seeing a court case that would say that tax rates were the same as taxes. And so they decided they had to get rid of that sentence. There is absolutely no intent of saying, okay, we'll have one income tax in April and another one in November. Our legislature, as Ann just finished saying, does not have a history of wanting to impose income taxes on people. And that's why you've seen massive cuts in spending over the past 20 years. So no, this is not going to allow the legislature to impose more than one income tax in the future. It was purely done because there will be multiple tax rates.
Yeah, it's interesting to note that some states, not Illinois, have allowed taxes to be imposed by counties. For example, Indiana has county taxes in all but one county, so that it looks like the income tax rate in Indiana is lower than the tax rate in Illinois. But in fact, when you add in the county tax, if you live in Indianapolis and you're paying the Marion County tax as well as the Indiana state tax, you're paying a higher rate than you do in Illinois today. And for the middle class, it will be a lower rate in Illinois today, in the future, if the fair tax passes.
There's a question about why businesses have left the state to go to other states with lower tax rates. So I think we probably need to chat a bit about who has left the state and for what reasons, and whom we expect to leave or not to leave in the future. There's a history of the primary groups which have left the state have been minorities, middle and lower classes, because they are not getting their needs met by the core services. They aren't getting the education that they deserve, or the healthcare or the mental health or whatever. And so they are leaving the state because of that. There's a concern that has been raised that the wealthiest businesses will be leaving, the wealthiest business owners. But that has not been borne out in the research. That the point is that they have made their wealth here. They leave the state not because of income taxes, but because of the weather, because of family, because of other business opportunities, but not because of income tax. So we are not expecting to see the mass exodus of the wealthy. In fact, when you look at other states that have far, far higher top brackets on the wealthy, California taxes them over 13%. Minnesota, I believe, is over 10%, and so on. So we are not expecting a major exodus of the wealthiest business owners.
Yeah, Crane's Chicago Business did a pretty good study in the last week that showed that after looking at all of the research and really closely looking at the studies, they determined that perhaps a few super wealthy folks would leave, but many more would stay. And that on net, raising taxes on this income bracket would result in more revenue for the state. It will not drive everyone out. Folks have social capital, they have friends, they have family, they have homes, they have reasons to stay here. This is where their business contacts are. This is a great state. It's got a lot going for it. They're not going to move to Arkansas, or, not to disparage, any particular state, but Illinois is a great place that they chose to build their business. And there's no reason to think that they will pick up and leave. And the research, in fact, shows that income tax rates are a very insubstantial part of a business's decision on where to locate. Other taxes have a much bigger impact, including property taxes, which may be addressed through our graduated tax system. We can finally get to work on those property taxes. And other considerations like how many customers they have in a particular location. So those are the reasons that businesses stay or leave, and raising their taxes to a level where it's still going to be lower than it would be in New York or California or many other states. It still makes sense to stick around in Illinois.
Steve, can you tell us what some of the other concerns are that were mentioned in your brochure? We want to make sure that we have a question about what is the opposition saying? And so could you, if there's something we haven't addressed, please mention it.
Sure. Let's see here. It says that this proposed change would make it easier for the politicians to raise taxes. It says right now there's no limit on the number of tax brackets or on how much high income tax rates could go, or whether voters, no voter input on future tax increases. So it sounds like once this is put through, politicians will be able to raise taxes whenever they wish.
Right. Well, they can raise taxes whenever they wish today. This doesn't change that at all. So I think we're getting feedback from somebody's phone. Let's see. Yeah. So the thing to remember is that legislators set how many brackets, but what they have proposed is pretty much in line with what most states do. They've got something for the really high end and something for the really low end, and then a few in between. Those could be adjusted in the future to make it lower for the middle class than the current rates have been proposed. It could make it lower for the very low end. It could make it, probably they won't go much higher than where they've proposed for the top bracket with 7.99% on the entire income. That is still lower than New York, New Jersey, California, Oregon, many other states, but it's not going to go, I don't think they can feel that they can push it a lot higher than that. But the number of brackets isn't really a scary thing. It makes it hard maybe for the accountants, but for your taxpayer, you have one rate that you're going to be paying, and that's not going to be hard to figure out.
Okay. Another one centers around.
Can I answer a wee little bit more about that? That for once again, as Ann said, the vast majority of states already have a graduated rate income tax, and of those, over the past 20 years, the middle class and lower classes have seen no income tax increase, and in fact have seen a decrease. So for 93% of those states that have a graduated rate income tax, wait a minute, I'm saying this wrong, aren't I? 93% of them, and help me out here. Okay, 93% of the people in those states, there we go, with a graduated rate income tax have seen either no increase or have seen a decrease in their income taxes. There, I finally got my tongue untied.
But in any event, the actual rates are not something that in any state is something that the voters vote on. And it's not something that you vote on for your federal taxes as well. That's what the Congress people set, or what the people in the General Assembly set the actual rates. And you have input into that through your elected representative. If you don't like what they've done, if you think the rates need to be readjusted, let them know. And if they don't respond to you and they don't listen, the League of Women Voters will tell you, you have a vote, and you can let them know exactly how you feel when you get to the ballot box. So it's not something that you would want in your constitution anyway. It's very cumbersome to change a constitution. The League has been proposing this for 40 years. That tells you something. It's quite remarkable that we have gotten this on the ballot. And if you look at the powers that have arrayed against it and the amount of money that's being put into the campaign against it, you can see why it has been difficult to get this far. The folks who are in this top bracket don't want to pay higher taxes. That's kind of what it boils down to. So if we had to go back to the voters every time we wanted to lower taxes, that would make it really hard too. So putting it in the hands of the General Assembly is a sensible place to have it. And the constitutional amendment simply provides flexibility so that they can set appropriate rates.
Okay, now, Anne, you mentioned a little bit earlier talking about healthcare and education, public safety. It says here in the brochure that it does not dedicate any of the new tax revenue toward those 3 or 4 different spots. It gives the legislature a blank check to spend billions of dollars however they want.
Yeah, that's a misleading argument again. Currently, when you pay your taxes, it goes into the general funds. A portion of the budget is what Ralph Martiri calls hard costs. They're things, if we borrowed money, we have to repay the bondholders. If we have contracts, we have to pay those contracts. There's no discretion. That is what has to be paid. And so those are the hard costs. Then you've got your more discretionary spending that is in the general revenue fund budget. 96% of that money goes to education, healthcare, public safety, and what did I leave out? Human services. So currently, the taxes that go in there are fully accounted for, fully spent, and they're not enough. So that we haven't been able to pay education. We haven't been able to provide adequate mental health services across the state. We haven't been able to provide domestic violence shelters. There's many places where our system is falling short. And if we have more money going into that portion of the budget where the state has some discretion over how to spend it for education, human services, healthcare, and public safety, then those services can get more adequate funding than they currently have. If the legislature said, well, if we get another $2 billion, it has to go here, then they wouldn't have the flexibility that they would need to respond to a public health emergency, say, for example, or they wouldn't have enough flexibility to adequately fund education through the new evidence-based funding model that they now have set up. It's possible that somebody will come up with a cure for a terrible, let's say COVID, and they need an influx of money in order to push out this new cure. We would want them to have the flexibility to be able to do that without having the money tied up for a particular purpose. But there's no other place for it to go than those 4 priorities. This additional revenue will go into the budget, and the budget is very defined how that money is to be spent. Governor Pritzker actually proposed a very clear map for how he would spend the additional funding. When he proposed his budget last January, he said, if the fair tax passes, this is how the money will be spent. And a large chunk, a very large chunk, went for education funding to meet this evidence-based funding model. Another portion went for the back pension bills, which have been accumulating and accruing additional interest payments and making our hole bigger and bigger. He has a plan to address that. He was also planning to put some money aside in a rainy day fund, which is something most states have and Illinois has really been short on. So if the fair tax does not pass, on the other hand, he had a different budget proposed that would have frozen a lot of spending and made further cuts to many of these key areas. So we do know where the money will go and what will happen if it does not pass and we don't get additional money.
We have a question about our retirement funds discretionary. Blago seemed to think so. No, the discretionary funds are exactly the way Ann described. The pension is part of the hard costs that are wired into the budget. And there are other ways of dealing with the pension ramp is just kind of absurd at this stage of the game. We need to re-amortize the pension. We need to take other steps. Passing a fair tax is a very important first step. Bringing in $3 billion is going to help the state a lot. Is it going to cure all the problems? No. There are other things that need to be done. And that's for our next meeting with the Addison Library, maybe next year. But at this point, we're focused just on what needs to be done and why to pass the fair tax.
Yeah, I just looked at the chat and the rest of that question about the pensions was that Blagojevich seemed to think they were discretionary. That's a pretty good inside joke. Part of the reason we're in the mess we're in is because Governor Blagojevich and before him, Governor Ryan and Governor Edgar did not honor the commitment made to the pension funds to make regular payments into the fund. People who are working for the state make payments into the pensions, just as people who are paying into the Social Security system make regular payments. Teachers, for example, are not part of Social Security. So they make payments into the pension fund and they retire and then they get that money back in the form of a pension. Instead of making the states match for the payments that the teachers paid in every year, the state said, oh, gosh, we're a little short on these other payments like school funding or human services or public safety or healthcare this year. I think we're going to just kind of borrow from the pension fund. And it won't show up in the budget quite like the problem that we have. And we'll just, we'll pay it back later. So they've done that more than once. It's not proper. It's created an enormous problem for the state now because when you borrow from the pension fund, you have to pay that back with interest. So we're paying it back now with interest from previous borrowing, and we're going to have to figure out a way to re-amortize the debt, as Jean said. But it is a hard cost, and Governor Blagojevich and Comptroller Susana Mendota have promised to meet that commitment in the budget that they proposed.
There's a question, and I think this is getting at a waste. Do we need another museum in Effingham? And yes, there certainly is some stuff in the budget, but it's nothing like approaching the $3 billion that we're going to be bringing in. That going back to what Ann was saying about the general fund, 96% of the general fund goes to education, human services, healthcare, and public safety. So that leaves only, I mean, which of those things would you cut? Those are all, very, very important. Of that remaining 4%, some of that is the environment and some other very essential kinds of services that don't raise to the level of spending of healthcare and human services and so on. So the point is that when people talk about waste and in the budget, sure, there's some waste in the budget, but it's probably about at most 1%. I'm not sure if I addressed his question, but I hope so.
Okay, ladies, there's only one more question, not question, but aspect of this newsletter that I'm hoping one of you or both of you can chime in on. This one seems to contradict some of the information that Ann said earlier, and I'm just going to read this statement. The constitutional amendment would trigger an initial tax increase of nearly 50% on more than 100,000 family farmers and small businesses in Illinois.
No.
So I think I figured out where that came from. Yeah. Well, first of all, farmers are often generally in the same category as small businesses. They are partnerships or sole proprietorships or S corporations, and they pay taxes through the individual tax returns of the partners or the farmers themselves. A few are organized as C corporations, and they will pay taxes at the same rate as very large corporations. That rate will go from 7% to 7.99% if the referendum passes and the new tax rates go into effect. So most farmers, though, are going, the vast majority of farmers are going to be in the same situation as other small businessmen and only pay a higher rate if they're above $250,000.
Their profits.
In their profits, yeah, in their absolute net profits. And that's after many of the Trump tax cuts put a lot more money in small businesses' pockets. And they have seen a number of other tax advantages in the last few years. And so this will increase, their taxes somewhat. But remember how the marginal taxes work. If you make just above $250,000, then only that small bit above $250,000 will be taxed at 7.75%. So your effective tax rate, if you take all of your income and divide it out by the taxes, you can see what your rate is, and it will probably be somewhere around 5%, 5.5%. So that's not a huge increase, say from 4.95 to 5% or to 5.5%. That's a small increase. It's the Illinois Policy Institute came up with a number that 100,000 small businesses fall into that higher category. I think that's a pretty high number, but even if it were, very few of those top say 100,000 businesses are going to be higher than say 300,000 or 350. They're not going to be getting up to the $1 million category. Only those who are in that over $1 million category will pay anywhere close to a 47% increase in their taxes. So there may be a few, and I'm talking like, I don't know how many you can count on two hands, or a couple dozen at most, but it's not going to be 100,000 of them making over $1 million to get to that 47% increase. The IPI study said that 100,000 businesses will pay up to 47% increase. And somewhere along the way, that up to kind of got dropped. And now they're saying, 100,000 will pay the top rate. 100,000 businesses are making over $1 million and will pay the top rate. Well, that's simply not factually true. They don't have the data to back that up. It's kind of a little bit sloppy going from the up to and then dropping that. So whoever is putting out that flyer should be asked to show their data.
Steve, we've had a question about where will the recording of this be posted? How can people get a hold of it?
Right, I'm hoping that we'll have this on the library's YouTube channel pretty soon.
Great.
The League of Women Voters of Illinois also has some other recordings from presentations without some of the technical glitches that we had, which I apologize for again. And so I'd encourage people to go to our website too for additional information and resources. It's
I'll put that in the.
yeah, okay, good,
chat.
good, yeah.
So yeah, at lwvil.org, if you click on fair tax, you will see, well, we have a presentation in Spanish. We have presentations that Ann and I have given. We have a presentation by Ralph Martiri. Pretty soon we're going to have a presentation that has sign language with it as well. So, and we do have a number of other resources there too.
Okay, thank you much. Thank you so much, Anne and Jean, for coming in today, for taking the time, for the knowledge and insight you shared with everybody. Before I go, though, I'd like to let everybody know that I'm going to be doing a program in a couple days on Wednesday evening called Fake News, How to Spot It. And we'll also be seeing a lot of other ways on how to actually fact check them. And there'll be some funniness going on too. So that's coming. You could register for that on the library's website. If you just click on events, it'll be one of the first few links on that page. But otherwise, thank you so much for dropping by, everybody. I appreciate it. And don't forget to vote on November 3rd.
Indeed.
Thanks a lot.
You're welcome. Thank you.
Good night.